I'm Chimwemwe Mangazi with Business Time on Times. It is a magazine program where we bring you business and economic news stories making headlines. In the program today, we speak to Reserve Bank Governor Wilson Banda on monetary and exchange rate developments. Also in the program, reporting season for Malawi Stock Exchange listed companies is here. We find out what transpired in a couple of annual general meetings. We have these and other stories. Stay tuned. Hello and welcome. Governor of the Reserve Bank of Malawi, who also sits as the chairperson of the Monetary Policy Committee, Wilson Banda, has hinted at a prolonged tight monetary policy stance in a quest to contain rising inflation. Banda says recent increases in inflation do not necessarily mean that efforts by the central bank are ineffective. He explains.
You should look at the context, at the background. Where are we coming from? This year has been a very difficult year. If you recall, we had those cyclones. A good part of the southern part of Malawi literally had no maize, right? Maize is now being moved from various parts of the country, and because of that, the landed price of maize in some parts of the country has been very high. So this is what has translated into a sustained rise in inflation, certainly through June or through May. We expect that as monetary policy authorities, we should not relent, we should not give up. We should continue tightening monetary policy. We believe that come July, August, we should start seeing inflation come down. But we are hopeful that inflation will come down. We don't think it's going to be a sustained rise in prices.
Should we expect further increases in the policy rate?
The MPC is meeting next month. The Monetary Policy Committee is meeting next month. Given the environment, we would like, as I'm chairman of Monetary Policy Committee, would like to maintain a very tight monetary policy. And by tight monetary policy, we mean a policy that will translate into obviously high policy rates, maybe tighter, reserve requirements, and the likes. We need to tighten that in the short term in order to make sure that once prices come down, they're sustained in that direction. Any relaxation or loosening up of monetary policy at this stage would not only undermine domestic prices, it will come back to haunt us in a further weakening of the exchange rate. So we need to tighten on the policy front.
On another end, we've seen continued pressure on the kwacha, on the exchange market. Why is this the case when this was a period we expected it to moderate?
We think that is more driven by speculation. If you notice, if from what we read, that is coming from the black market, right? Black market is essentially a market for speculators or those that don't want to operate in the formal sector. If you are looking at the supply of foreign currency in the market, this time around is much, much better than it has been since the beginning of the year. You know, tobacco is doing very well this year. It's brought in a lot of foreign currency. Our import cover as the central bank is going up. It's really going up. We're seeing that benefit.
Where are we now?
Well, we're still under 1 month, but it's picking up. It's a seasonal thing. We are coming from a period where demand was so high and supply was very low, and the discrepancy between the two resulted in a depletion of our foreign reserves. We're now building up. You know, we've got a program with the fund, and one of the targets in that program is that we should build on net international reserves. We are achieving that. So I'm saying that in terms of net foreign assets, we're doing well. That should in itself indicate that the exchange rate should not be under pressure as what you are seeing in the black market. I think we in the central bank look at it as that being driven purely by speculation rather than facts on the ground.
Members of the public under the banner of Minority Shareholders Association of Listed Companies, Misaliko, have reiterated the need for the government to offload its shares in Sunbed Tourism Limited. This came out during the company's annual general meeting held in Banda on Friday. We have more in this report.
Currently, the government of Malawi is the largest shareholder with 71% shares. Press Corporation PLC owns 15%, where members of the public own 14%. Misaliko General Secretary Frank Harawa says the alternative is for the company to issue more shares on the market.
This thing of sometimes a government trying to to replace old directors with new ones, because remember in this company government holds 71% shareholding. Therefore, they have the right to appoint almost 7 directors on the board of Sunbed. So it looks like they were taking out almost 5 directors, and they're replacing with new ones. And then we were saying there is a need for continuity, and changing 5 directors is a simple issue. And we also looked at the criteria of the people that were coming. Of course, they were young ones, female, but we're saying, are they going to add value to the company? Did they do proper due diligence? What criteria did they use to find these directors? Because we're talking about issues of money, and these are monies that the monies of Malawians here, who are waiting to make more profits and make more dividends, capital gains. And we're saying, are these serious directors? And we're also saying there is a behavior whereby some government directors, they come to this meeting, they just sleep in the meetings, they don't fully participate as long as they get their check. And we're saying this is our business, and we don't want that. You as the chairman, did you do proper due diligence on them? Did you evaluate the board that you were going to have this year? So those are our concerns, really. I think this has been our cry for a long time. It's years now, and little is being done. So what we have done as the Minority Shareholders Association of Listed Companies, Misaliko, we have asked to meet the major shareholder so that we can talk to him. Maybe we can put sense to the major shareholder as well. Because look, if the shares in issue are few, less than 1 billion, we're talking about 200 and something million shares, and 71% are in the hands of government. The 15 is in the hands of Press Corporation. The other part will be in the hands of the management companies, and then maybe the public. So maybe the public has only maybe 8%, 7%. So we're saying this is not enough. So we're saying and because of that, you find that there's no liquidity in the market. So the share price cannot move up because no government can sell shares on the market. It cannot do that. The other shareholder, Press Corporation, cannot do that. Therefore, there will be no liquidity in the market. And because of that, then the share price will not move up as it's supposed to because there are no shares. So it's like both of us, we are losing. The major shareholder is losing. We are losing because there's no movement in the market. So we're going to meet them. And we're proposing to them that I think this is long overdue. Time has come now that something has been put in place so that we have enough shares in the market. People can buy and sell these shares on the market. With the issue of the auditor, we noted that the auditor that they have just taken out now, to us, it appeared that he has only been there for less than 2 years. And we're saying, what rules are we using? What laws are you using for you to take out the former auditor and bring in a new auditor? And also we're saying to them, did you advertise this? And we're saying, do you know what is happening out there, that several companies have suffered from the same auditor that you're appointing now? In public, there is no good news about this auditor because companies have lost their money in billions. And we're saying, but really, what criteria did you use to appoint such an auditor again? They try to justify it, but we're not happy.
Sunbed board chairman Vilipo Muntali says they have had engagements with both parties. However, the matter can be discussed among themselves.
The ones who are asking the government to offload, they also hold shares. Are they making their shares available on the market, or they are holding? Most likely they are holding on to their shares. So we have had engagements with both parties. It's purely a shareholder matter which they can discuss among themselves. We are on the board. We represent their interests, but as we speak, I'm sure they are now in a meeting. Not a formal. It's a very informal meeting, but perhaps it could be the beginning of or a new beginning, let me put it that way, but because it looks like previously the majority shareholder was not meeting the minority shareholder, as it were. But now they will be able to discuss those concerns. And as I also mentioned during the meeting, selling or buying shares is an individual choice. You cannot force someone. I'm sure you're holding shares for other companies in the market. No one is going to force you to go and sell those shares. There must be some circumstances, personal circumstances, that may force you to sell your shares. So we reflected on the same, and we shared with the minority shareholder, because they used to come through the board, as it were. But we said, no, this should be a shareholder to a shareholder matter. Do not involve the board, because the board is representing both parties. Well, for us, maybe luckily or fortunately, but also the way in which our structures were put up, you may wish to know that there are certain measures or requirements for one to put up a structure along the shores of our lake. There is it a minimum, or the minimum height, or I've forgotten the actual number, but it's like 300 or something feet above sea level. So those properties that have been adversely impacted were built below that. That's why they were affected by the floods or the rising water levels. But most of our properties were not affected to a degree that our business was negatively impacted. That's why you would have seen those results, like the half-year results that we have published, the trading statement that we issued. I think this incident happened, is it in April to May? It took quite a while, but our occupancies were not that negatively affected, although part of our infrastructure was damaged, but not extensively. Mostly you would have seen mostly the beach area, the infrastructure that we have along the beach, and in few properties, perhaps a wall here or there, but not the residential units per se. And like in some of the facilities for the competition, you would find that water seeping through into the rooms, flooding literally the entire property. We did not experience any such incidents. On the revenue side, our occupancy has improved greatly. We were around 56-57%. From prior year, we were below 40%. We are now heading closer to the levels that we were achieving before the COVID-19 pandemic. And as you might have seen, our recent performance for this year, up to June, we issued a trading statement yesterday. You see that the performance has improved further, confirming that it looks like we are really getting out of the woods, as it were. So we are back to the pre-pandemic levels. To begin with, we have a committee, a board committee, that oversees that part of the business. Internally, the procedures were followed, more especially that we are looking at a specialized area. We talk of the big four or big three, and globally I think we're talking of the big four, but now with some of the big firms reducing or scaling down their operations, now we are talking of the big three, and all the big three were approached. The challenge we have is that there have been certain developments in the market. For your information, this process is not something that just happened last week. It is a long process. Some of the developments have happened long after internally we had gone through a number of our procurement processes. So I would be talking about close to 8-9 months ago before some of the concerns that were raised, which are specific to particular events, came up. But as a board, we are confident in the choice of the auditors, and we know that what has happened so far is unique to the specific sectors in which the corporates that have been impacted operate in.
Meanwhile, the AGM approved a final dividend of 1.5 billion kwacha, representing 5 kwacha 70 tambala per share in respect of the financial year ended December 2023.
Shareholders for one of the country's high street banks, Standard Bank, are smiling their way to the bank after the institution approved a 12.9 billion kwacha final dividend for the year ended December 2023. The final dividend represents a 54.97 kwacha earnings per share. This came out during the bank's annual general meeting held in Banda on Thursday. Brian Kapanga is one of the company's shareholders.
No, 2023 was good, and we are impressed that they managed to do the very best they could, considering the macroeconomic conditions in Malawi. We, as the shareholders, are very happy that the dividend which they have declared of 108 kwacha, being the interim and the final, is above the market, and we are very happy indeed. Yes, maybe not for this year, but for the next 2 or 3 years, the mining sector is going to be more vibrant, and we would encourage them to consider investing their effort in the mining sector. Yes, but we as the minority shareholders would love if the number of shares which they have could be increased. You know, Standard Bank has about 234 million issued shares, which is less than 1% of all the shares listed on the stock exchange. We approached management, and they have promised that they will be looking into that, because when the number of issued shares is low, what normally happens is that the shares are overpriced and they only benefit a few people, and the economy as a whole does not benefit. If more shares would be increased, more people would be buying and selling, more wealth would be created along the way, and therefore the economy as a whole would benefit also.
And Christopher Kapanga is the Standard Bank board chairman.
We have a strategy in place, and these strategies are rolling strategies for 3 years. So we had planned 3 years back that this is what we are going to do. And when you do a plan like that, you factor in things that you expect will happen. And some of them do happen, others do not. So as you say, yes, we had calamities, we had cyclones, we had inflation, double-digit inflation, and then we had the devaluation of the currency. But in spite of that, we indeed managed to do a profit that was way beyond our expectations and also beyond what we did the previous year. And the simple answer to that is we remained resolute to our strategy. We remained resolute to make sure that our people are delivering on whatever that they have promised that they will deliver according to the strategic plan. And we made sure that our customers were the main focus, because without customers, there is no bank. So we needed to make sure that we look after the old customers as well as create new customers, even in spite of all the problems that we had. And that strategy worked very well for us, hence the profit that you're talking about. Yeah, it's a combination of all that, because if you look at our financials, you'll see that we actually grew our loan book, we grew our customer numbers, we grew our non-interest income, and we grew our interest income. So there was growth everywhere you look. So it is a combination of all those factors that results in the 52.3 billion that you're talking about. Yes, when you make a profit, obviously you have to think about the future and invest. And we're doing that. Even after doing that, we were able to declare a handsome dividend. But we're doing investments, for example, in our IT. We have recently localized our IT platform, which means it's now in Malawi. You know, Standard Bank is international. It was sitting in South Africa. Now we've moved it to Malawi, which will make it easier for us to change things going forward. And that still happens. So we are investing. We haven't stopped investing in technology. And recently you've seen that AI is the talk of business. And we have got a close watch on what is happening in that area of AI. It's got its advantages, it's got its disadvantages, but we are embracing it as a bank to make sure that going forward, AI is going to be a tool that we are going to use. So the investments will continue, and we will still continue to declare dividends as long as the result allows us to do that. Yes, we are looking into areas where, for example, we did not concentrate on before, areas like agriculture. So that's one vector that we are looking at. Areas like mining, we're looking at that, and areas also like tourism. I think government has said ATM, as you know. So we're following the government strategy as a bank because we say Malawi is our home and we drive Malawi's growth. So whatever government is doing, we're following that closely to make sure that we are relevant in whatever the government is doing. And we are also watching closely what government is doing in the Vision 2063, because as a bank, we need to make sure that we are relevant in that vision. I expect that the headwinds, the economic headwinds will continue. I expect that inflation will ease a little bit. I expect that we still will have forex problems for a while. So the terrain will still be difficult for us to maneuver. But as a bank, we've got strategies in place to be able to deal with these things. The thing is, when you anticipate things, when you prepare for them, you can actually deal with them. The worst thing that you can do is not prepare for them. So yes, the terrain is going to be difficult, but we are going, as a bank, to be resilient and manage all that.
With that item, we've come to the end of today's edition of Business Time. This is a magazine program where we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, I'm Chimwemwe Mangazi. But always remember, if it doesn't make money, it doesn't make sense. Bye for now.